All right, we are officially live. This is the Tesla Beat podcast, week 29. We are going to keep you updated on all things Tesla as we do every single week. So thank you for joining us. And it's funny how this all works out. Actually, I think it was Sawyer who said never buy a Tesla on a Friday, because of course in very Tesla nature, they of course dropped or raised the price of the Plaid Model X by 5,000. But thankfully, the way it's all worked out is Fridays seem to be the best day to actually give the updates on all things that are going on. So thanks for tuning in. And we actually, I think Jeff may be joining a little bit late, but we also potentially have a couple of special guests today. You are probably familiar with the Tesla milestone guy, or Herbert Ong, who runs Brighter with Herbert, and he has just become a great member of the community, and so we are going to welcome him today. Herbert, how's it going?
I'm doing well, thank you. Thank you for that great introduction. Love it.
Let's get brighter.
We are about to. So again, I think we may have Jeff potentially coming in, and potentially Tesla Fix, Jan from Germany coming in to just get everyone's perspective. But let's get started. The first couple minutes of this might just be a little bit more boring. I'm just gonna kind of like give the rundown of some of the financials through some of the slides, and then I want to do a round table on everyone's perspectives. But let's just get into it. So all right, so here we have the year-to-date view of the Tesla stock. Obviously, I believe even last week it was at up 135% or something like that. So it's definitely been softening. I think the street definitely took a big hit on the stock this week. I know the last time I bought specifically, that it was roughly, I think I got in at 221. So 215 is a new low that I think we've seen. And I think you can actually look at this. I think it's sometime in August. It was the last time it was this low. So definitely a brutal week as far as the stock goes. But, we're going to get into potentially, again, the results, and we'll potentially get into some of the, what the street expected and kind of like where we're at now. So, all right, let's just check out the quick highlights. Again, this is from the Tesla investment relationship deck. We know that I'm going to quickly go over here. Let's go to the revenues. They got to about 19.6 million in revenue, which was a 5% year-over-year growth. The interesting callouts too were energy and storage revenue were up 40%. Services and other revenue was up 32%. We do know that obviously what everyone is also looking at is the gross margin, which was at 17.9, it's down from 22% from the previous year. Previous year was it was actually 25%, so 719 basis points, or 22% down. So a lot of things happening this quarter, and obviously we will get into that. Additional, again, you probably already knew this, deliveries was at 435,000 cars, or 27% year-over-year growth. We do know that they did shut down several factories, so the actual amount produced was not as high to ramp for the Highland Model 3, which obviously in North America, I believe they decided to no comment on this. But yeah, I think, we'll get into some of the other stuff like the capacity that I think they shared out. But just high level, we've had, at least if you're new to, or you haven't paid too much attention to what happened on Wednesday, but, you're a regular watcher on the Tesla Beat, I would love to, we've had 2 days to kind of digest everything. We've obviously heard from, what the street analysts think, but what were your overall takeaways? I think, Herbert, maybe we could start it off with you and then go to Joe or Amy.
Okay, thank you so much. Yeah. So, okay, let's start with this, right? So if you're comparing Tesla against Tesla, it's not great because of what we were all thinking that we were going to achieve this month, this quarter specifically. But it's a tough macro. So if you compare to other companies who are just struggling, many of them are probably not going to survive anymore. The three big three are going through unions. They're all also suffering from the same interest rate environment that we're in. So, comparatively, it's shockingly how good this company is. Now, overall, the earnings call, the mood was definitely somber. They didn't give a lot of, kind of like that the catalyst that we want to hang our hats on. And so, if you're a short-term trader, you really lost your ability to say, "Hey, I want to, FOMO. I need to get into Tesla as a stock." But if you're a long-term trader, it's amazing if you think about it. If you look at the Outlook page, there was two main sentences that I just honed in right away. Basically, they said that 1.8 million vehicles is still on target for 2023. They didn't mention what 2024 is going to be, but if again, we're going to dive deeper into this. But when they talk about that, yes, they lowered the expectations for Giga Mexico because they don't want to invest in it. Doesn't mean that next gen vehicle is going to be delayed at all. In fact, they started work on that in May in Giga Texas, and then they said that they're going to expand Giga Texas itself. So, people are misinterpreting that there's going to be some sort of fall off significantly. It all depends on macro and interest rates. And then he said that the Cybertruck deliveries remain on track for later this year. And they announced that the launch event, the delivery event's going to be this year. They talked about how AI teams by far the world's best when it comes to real world AI. They talked about the fact that robotaxi and the bots will be able to do ballet. The robotaxis, he repeated the 5 times use. That we're a hardware company but with software margins when that happens. And he talked about energy, the highest margins we've ever had. The problem was typically in a normal earnings call, the typical ones that has happened, these kinds of statements he kind of delivered it in a more just upbeat way. This time he was a little bit more downbeat, and these fell flat. So that's the issue that people kind of like heard these things, but they didn't realize that they're really still very, very important things for the company, and yet they focus on the things that they thought were really, really negative. And there were some negatives for sure, right? So he did punt on the Model 3 launch in US, but of course they're going to, because they don't want to have the Osborne effect. So that one I wasn't really worried about. He kind of punted on the robot progress. And that one, us personally, because I love the bot so much, I was a little disappointed because while he talked about how great the bot progress is, I really wish he had said something a little bit more about what's upcoming. Maybe there's going to be a new demo. Maybe he just said we're progressing really fast. Maybe the actuators are now developed well and we're ready to scale. He kind of just said, hey, this is going to be a great thing and watch out for new videos coming. And I think that might actually be a hint that there might be another new video coming in. So he didn't want to prepare that. I might have been reading a little too much on it. And then, of course, when he said that in the Cybertruck, we dug our own grave. Oh, it's just those poor choice of words because, you know what's going on with Elon, right? He personally is in production hell, and that he always is. And anybody would be when you're about to launch a net new product, let alone a new, needing a new factory to build this, production line to build this new product. And so he's focused on that. He needs to make this work. But at the end of the day, when you step back up and look at it again, he said 18 months, which is a standard, typical timeline for delivery. It's just he personally is so into it. He needs to make sure this works. So there are people out there interpreting that as saying, oh my God, the Cybertruck is a total mess. It's just totally delayed. There's some truth to that, but it's also not true. I mean, at the end of the day, 18 months before it gets cash flow positive, it's not terrible. That's what I would have expected. He's just setting the kind of the stage, but obviously he himself is just so deep in this hell, and he will be in the next several months, and he expressed that. And then, obviously he spent too much time being very, very depressed about the future, being paranoid because of the PTSD that he had in 2009. And that was something that, retail investors, institutional investors, the general community, we weren't wanting to hear because he himself said, I might be a little bit too paranoid. But, that was definitely set the stage for the mood of the call. So I'll pause there.
Yeah, that was a good point. I want to also highlight the fact that right before the Model Y launch, it was a terrible earnings call right before that. And everybody was just like, everybody had that same type of attitude, like, oh, it's going to be terrible. I think the results of that ended up being what they were, and where we are right now, right? And I think the same thing, like anybody who thought that they were going to sell like 250,000 cars next year of the Cybertruck wasn't being realistic. You're looking at a few this year, and then they'd have to ramp up through next year, just like how they did with the Model Y, just like how they did with the Model 3. And the Model Y ramp, as long as it took them to get to the 5,000 units, and that was using the majority of parts that are similar with the Model 3, and it still took a while. So you're looking at a completely new vehicle with completely new processes, and everything is like from scratch, right? It's like, of course, it's going to take a little bit. I don't like the expectations that people place on Tesla. But like you say, when you're comparing Tesla to Tesla, it looks bad. But when you look at the rest of the industry, it's like, who else are you going to go with? You know what I mean? Like, realistically, who else are you going to go with? So that's my take.
Yeah, that's a really good call out, Joe, about the earnings call prior to the Model Y ramp. I do want to stress, when Elon Musk starts talking about macro factors, he tends to be right. He might not be right on the timing, but he tends to be right that the economy is going to be maybe going through some trouble. So people that have the need to spend some of their money in the short term should go to the financial advisor, and they should set themselves up and just heed this as a warning and a wake up call that if you've been spending like it's the roaring 20s, it's time to kind of batten down the hatches. That's what Tesla said they are doing. This is what you want from your management team. You want your management team looking far ahead. You want your management team to be identifying any possible risk and planning to be able to weather the worst case scenario and then come out strong on the other side. I also think that, it was right before Powell was due to speak, and he said interest rates, over 11 times. And then Powell spoke, and interest rates are on pause for a little while. So I do think there was also a desired macro result that he was doing as like the guy carrying the big stick to try and put his company in the best possible situation. And we have seen the price cuts, and he reiterated that the price cuts is just keeping the payment kind of average with where it is. Tesla isn't getting like any extra, the consumers aren't getting like any extra value there. It's just like he's just offsetting price cuts. And then Tesla has done something that was exceptionally lost to me in all the coverage, was the COGS reduction that was announced, $37,500 to produce this vehicle. It is something that we've been talking about. Herbert and I had talked about it. We've been talking about it on the Tesla Beat, that Tesla was being hyper focused, and they've given us many instances of this on many earnings calls, on renegotiating supply deals, on improving factory efficiencies. Even they shut down the factory and they retooled it. And they didn't just retool the Model 3 factories, they retooled the Model Y factories as well to streamline production and to really hyper focus on reducing the cost. In the past, when Tesla has gone into difficult macro environments, and we don't know that it is going to become a difficult macro environment, but there's political instability in the Middle East. That is a big change that the world needs to recognize, that could snowball into something. That what happens with the interest rates if we start having some failures in commercial real estate in other areas, we just don't know. So smart people plan to make sure that the unknown doesn't just like massacre them. And what Tesla's earnings call shows us is Tesla has 26 billion in cash. Tesla has very low debt. Tesla has hyper growth, disruptive products that they're self-funding at a profit margin higher than anyone else. They're self-funding AI. They're self-funding the bot. Most AI companies are losing hundreds of millions to billions of dollars in trying to do this research. So Tesla isn't there. And if Tesla is giving a warning, then what is happening with everyone else? Like Herbert said, like what is happening with all these other manufacturers out there? And this for them is an existential threat. It's a couple bad quarters for Tesla, It is an existential threat for other companies, which is sad because that's a lot of jobs, but it is truly the case.
I feel like I should just take that like 15-second segment and just hit replay like 15 times because I think,
That's good.
I mean, and I know Herbert, you're covering this, obviously, pretty much every weekday, and you're like in the thick of everything. And the UAW stuff, it doesn't seem like it's getting better. It's starting to impact suppliers, even further. Like people are starting to lay off a ton of people. Like suppliers are laying people off. It's not just the OEMs anymore. They're, who are laying people off. And Lucid just gave their delivery numbers, which came actually pretty late from my understanding, and they are actually reducing production significantly, and it's because they actually cannot move their inventory. So I know, Herbert, maybe you have more of a download or pulse on what's happening with the other
Yeah.
companies right now.
I just want to mention just on what Amy just said, right? Which is, it actually now makes sense after you saw what they did in earnings call. In that they grew their cash by $3 billion. They still had cash flow, which is shocking. And so what they did was they reduced their investments. Not going full tilt on Giga Mexico, because it's these factories. When you go build something, and of course they have to do the Cybertruck, that is a huge drain on cash and just expenses. But they're putting all that money in AI. And so they're throwing $2 billion this year and $2 billion next year on the chips. And so it's like, okay, I'm very happy when you stop and think about that, right? Which is okay. Unfortunately, the investors, I'm sorry, they really focus on Tesla, the car company. And so when they see a reduction in production or any kind of sign that there's going to be a reduction in output, and then maybe potentially price cuts, that's where they freak out, right? And that's why they see that. But if you stop and think about it, I'm very happy with where they're putting their money, because they still put money in the AI, and the investments they're making in these other areas. I mean, I think everybody is very aware of what's going on with all the other competitors. I think they themselves are starting to see this, and I think even the general public is realizing at this point that these companies are in trouble. And I was thinking about this too. This point that this is really, like what Amy was saying. This is tough 2 quarters for Tesla, but it's existential threat for these companies. At the end of the day, in 2 years from now, Tesla is going to be, not that they intended it to be, but they're going to be basically one of the only remaining automakers who can actually invest. So if there was it was a low interest rate environment with much of cash, all of these competitors would have been able to get investments, and they would have been able to produce an EV profitable, be able to make their way through the production hell. But they're not, because of the union, because of the high interest rates. These guys will struggle so hard. So then in a couple of years, Tesla's going to just be, when the interest rates return, when the macro revolves, Tesla's going to be just incredibly well positioned at that point. And so I think it's painful for the next year, but it's actually even more amazing what will happen at this point in the next 2-3 years than it was a year ago.
I also think one of the best things about Elon and about Tesla in general is that you have a CEO that keeps it real. You know what I mean? Like, this isn't some guy like telling you that, oh, guess what? In 2026, we're going to have, this product's coming out and this is what it looks like. And, you know what I mean? And don't worry, we're going to be producing, you know what I mean? Like, he's not blowing smoke. He's just telling you like, hey, this is what we're doing. This is how we're prepared for it. And, you know what I mean? Like, of course, like, analysts are going to freak out or whatever. But as we all know, this is like the short term, just like, who knew 2020 was going to happen? You know what I mean? Like, and these are things that are not immediate. I mean, these things are immediate, but not long term. So I don't really worry about that. But I like the fact that he's honest of where his head's at. We don't get the honesty, and we don't get the insights from some of the other CEOs of these other companies. All we do is we hear like, oh, they're investing in this and they're doing that. And, you know what I mean? Like, what was it? I think Nissan or Toyota or somebody had a crazy cyber looking SUV that they released called the Hyper something yesterday. It's like, you're not making that vehicle. It's not going to look like that. You're not doing that. But here they are blowing smoke. You know what I mean? Instead of being honest with themselves and being honest with their investors. Whereas we have somebody that's honest, and it might not sit well with some people, but I, for one, am glad that he's keeping it real.
Yeah, I would say what Joe said about the short term versus the long term is very insightful, and that's absolutely true. Is I read somebody else's post that had also invested in Tesla since the IPO, and he's like, it's really a weird position I'm in right now when I look at the company, because the next couple of quarters, the last quarters we had, the next couple of quarters going forward are some of the ones I think will be the most difficult in the company's history because of everything that's going on. And I couldn't think the future was brighter at any other time in the history of the company. So you have the dramatic dichotomy between the turbulent waters that Tesla is going to be navigating. And I really do appreciate the heads up from Elon Musk. Let's talk about one of the positives and then the Gen 3. So positive, of course, is Tesla Energy. The reason why Tesla is in turbulent waters is because auto is a cyclical product. It is dependent on interest rates because that's how people finance the vehicles. As the interest rate market changes, then it becomes harder to produce cars. Tesla has better data on this than anyone else does because they have their end-to-end software. Cars aren't going out to the dealers and they're not waiting for data for 3 to 6 months later. So they're positioning themselves now. Energy, however, and services. And for the first time on an earnings report, we heard that energy was a meaningful contributor to the actual bottom line. This is what we've been waiting for. This is actually what Herbert and I have talked about so many times, right, Herbert? And now it's actually a meaningful contributor to the bottom line. That is before Lathrop is fully ramped. That is why we still have interconnection queue issues trying to get these projects that are set to go approval to hook onto the grid so Tesla can recognize the revenue. And that is before Mega Shanghai, the new equally to the size of Lathrop factory, is done. So another 40 gigawatt hours. So that is going to be a huge difference over time for Tesla. Tesla also said on this earnings call, they came back and said, no, energy will be our highest profit margin product. And over the summer, they weren't sure if that was going to be the case. And now they're going back to energy is going to be our highest profit margin product. That is coming online next year, Mega Shanghai. So we're going to start to see a little bit of a smoothing out where we get this revenue contributor that helps Tesla in the poor macro environments with the auto. And then when FSD is solved, that just transportation is always needed. People still need to get to work. It doesn't matter if it's a bad economy, people still need to get from their house to go to work. And if Tesla has FSD, if Tesla has robotaxis, that further divorces Tesla from this being really dependent on the cyclical economy. So like the future is incredibly bright. The short term is possibly very turbulent. It's just a possibility. It's a worst case scenario, but we have an excellent management in the company that is managing for the worst case scenario. And on Gen 3, very quick, I totally agree with Herbert. It was a sea change to me when they said that they weren't going to be pedal to the metal, basically is what he said, on going full forward on new ramp because they weren't going to do the factory. But as Herbert said, they actually have already planned around that. So Tesla always has many different ways they could solve a problem. They're not looking at a new factory to produce Gen 3. We already know from Walter Isaacson's book that they're doing it in Texas. We also know from Investor Day that they're saving space in every existing gigafactory for a Gen 3 line. And Elon Musk said that they're still ordering the long lead time equipment that they would need in Mexico or that they could place into other factories. Remember, they've done that before. They took the 4680 machines that were meant to be for Berlin and they brought them to Texas. So they can order these long lead time items if they decide not to build a factory out right now, put them in other factories and still keep the Gen 3 completely on track on production and deliveries without having a $5 billion expenditure. That's what it takes to build a factory. And then you have the continuous drag on margins as you're ramping it. As Joe said, it's not quick to ramp a new vehicle.
So I thought I would just take a moment to actually just quickly bring in Jan. Thank you for coming. He runs a channel called Tesla Fix, and he is based out of Germany. So we're actually just going around right now and just mentioning some of the key things that we thought from the earnings call. Maybe we could actually pass it to you potentially, what did you think of the earnings call? Was there any, thing from even the European side that you're paying attention to that you could call out for us?
Absolutely. Thanks for having me. For me, in the earnings call, the best thing was, of course, the smaller compact Tesla that's about to be dropped, hopefully, when the factory runs and everything, of course, because I think this is very important for the European market, especially because, we need this low-cost vehicle here because the Model 3 Highland, for example, is also a good seller. And even when we have another price drop, this category would be a game changer, a total game changer, because, of course, here, this vehicle category is absolutely important for the market. And that's why I really much look forward to that. It's sad to hear that they had some delays with the permits and everything, that Tesla didn't or didn't finalize the design, that it will have a delay a little bit. But hopefully that's something, a theory that I put out or thought about, is that maybe they're going to produce the smaller compact car as well in Berlin, because it would make totally sense to produce it in Europe, actually, because there's the target market. And that's why I'm looking forward. Maybe the factory in Mexico isn't even running, and maybe Berlin will be the first factory that could produce that.
And Shanghai and Texas.
Exactly.
It's going to be in Shanghai as well, right? Does it not make it makes zero sense, it makes 100% sense that they will expand Shanghai to build the Gen 2 platform. I mean, it's just going to happen, and you know how fast they can go. So,
yeah, but I'm not sure about Texas. I think Texas would. Yeah. I'm not sure about Texas, because in Texas it makes sense that they produce the Cybertruck, for example, of course, because this vehicle category is very important for the U.S. market. It could be, but I assume that they will maybe export it from Shanghai before they would produce it in Texas. I'm not really sure about that. That's just an opinion, of course, and not based
Texas
on anything.
Is actually where the pilot line is, though, because of the engineers.
Okay.
So because of that, they will be producing in Texas, because that's going to enable them to have the fastest ramp. And if the factory, we completely agree with you, Jen, that we think that maybe the factory in Mexico is on hold, but the Gen 3 production is not on hold. And it will, and we do think it will come out in Berlin, and we do think it will be in Shanghai. And we know that the pilot line is in Texas to enable the fastest ramp, because you have that immediate feedback loop with the engineers.
Yeah, and I think
That's
Elon, I don't know, feel free to fact check me on this. I remember somewhere partially part of the reason why they wanted to move it, I thought, from Mexico to Texas is just because Elon wanted to be close to it as well, right? Because I think this is only going to be, the Cybertruck is a beast in itself, but this is going to be their mass production car, and so I assume that he wants to be close versus taking an additional flight down to Mexico to do this. So I would assume whatever they do is going to be definitely in Austin. The Shanghai team is ruthless as well, but I'm not sure like they initially thought doing it in Mexico made sense once they really actually started to put pen to paper. But yeah, I just wanted to mention a couple of my call outs, I think, from the earnings call as well. I think everyone hit on some amazing points. I think the things that really stuck out to me were, I think we all knew, like, if you think back to shareholder day, I think Elon, that's the thing. I think when you follow the stock on a daily basis and sometimes even quarterly, you forget some of the things that happened literally 3-5 months ago. I remember back when I went to Investor Day, Elon pretty much said, just close your eyes for the next 12 months. And obviously now you fast forward 6 months later, we have a lot more information. But as we all know, the macro is just kind of continuing to get worse, right? There's now several wars happening. The interest rates are still really high. And there's just still, a lot of uncertainty. And even in the tech world, which is the world that I'm in, there's still been a lot of layoffs that happened in the past year, but they're still continuing to do layoffs. I still hear it. And there's been several big companies announcing layoffs as well. So there's still a lot going on the macro side. So I think that's, again, Amy and Joe, you all called that out. And I think that's the pro and con of Elon is he's always going to give it to you straight. He doesn't care what the analysts think. He doesn't care necessarily how people are going to interpret it. And sure, sometimes he could have a better delivery and maybe not using, like, we dug our own grave on the Cybertruck. But that's just what he is. But the great thing is you're always going to get someone who's going to kind of tell you how it is. And the one thing that is different about Elon probably than any other CEO you will have at pretty much any company is he has a pulse on pretty much a lot of things that are going on from a world perspective. With the amount of leaders that he's meeting up with, the amount of things because of Starlink, obviously, like with the Maui fires, to the stuff happening in Israel, to stuff happening in Ukraine, because Starlink obviously can provide internet to those impacted areas. He's always just hearing about what's going on the macro side. And so I think, you are going to get more of that negative view from him. But if we just step back, I think, again, I had to remind myself, again, what Elon said for the past 6 months or 6 months ago at the shareholder day. And it's just that, there is really no other company like in this space, whether it's, cars, AI, autonomy, that you really could be more excited about. Right. And I think, as we think about GM and Ford, they're not going to be profitable on EVs till 2030. We know that there's no way that they're going to be able to I don't believe that they're going to be able to create a software. I believe that Tesla is going to become potentially the licensed software, potentially for at least the US automakers at some point. But as these companies are struggling and pretty much, they have this ball and chain that's really keeping them down, which is ICE cars, and more importantly, the UAW strikes, they are going to have an even harder time to transition into electric vehicles. So Tesla is going to continue, and I think, Amy, you spelled it out beautifully when you said that as Tesla is struggling a little bit now, it's even 10x for these other companies. And so, and the crazy thing is, even despite all of these macro headwinds, or more importantly, these things that, these couple of nasty quarters that this quarter and potentially the next one, and the one after that. But with all of the things going on, Tesla is still investing in AI. They're still investing in the bot. They're still investing in Dojo and re-innovating everything that they do. Right. I think, like, we'll get into the cost of goods potentially, but they had to, they have over 10,000 parts, and they essentially were able to lower I could be wrong here, but it's like you had to lower those 10,000 parts by an average of 40 cents per part. I mean, this company they don't just say, oh, it costs $15, we're good. They continue to try to rethink of the way that things should be done. And so I guess all that to say, I could beat on this all day, but it's just, there's no other company that is going to be well positioned in a year from now. And I think it was Herbert and Joe who had mentioned too. It's like, they added 3 billion cash. I mean, they got 26 billion cash, and this is even in a down quarter. And so, it's just, I think those are all the things that you need to pay attention to. And I love some of you that are in the Twitter or the X spaces there's a guy named Stock Talk. I'm taking his quote, but he always pays attention to, like, okay, was this quarter miss due to inefficiencies or things that they're not executing well on? Or is it actually due to the fact that there's macro headwinds and this company is still executing on all cylinders? And I think that's the biggest thing here as like an investor, is just paying attention to, is there things that Tesla's doing wrong right now that they could be doing better, or they're missing on, or they on the opposite end, they're continuing to execute, continuing to perform, and really look forward. And I think that's the biggest difference here, as far as like where should you be. Again, this is not financial advice, but like where I look at where I want to put my money, it's, those are the two things you really need to be looking at when you're thinking about the companies. Like, are they missing because they're just not good at what they're doing, or are they missing because they're not good at what they're doing, or are they actually just executing very, very well? So I think that's, Herbert, I don't know if you wanted to say something, but
I want to say something. So there is one topic that I think is probably the most important topic, and I'm shocked Amy has not brought it up yet, so I'm going to have her bring it up, which is batteries, right? So I want Amy to talk about what Drew talked about, 4680 progress, which is really, really critically important. And the thing that happened just a couple weeks ago that few people have talked about, and Amy and I have been really focused on, was the cattle factory in China launched, and now they're open. And they can produce 80 gigawatt hours per year, which is equivalent at the minimum 800,000 vehicles per year. And they're literally next door to Giga Shanghai. So these two events are like pretty massive. So Amy, please tell us about 4680. I can't believe you haven't said it yet.
Yes, I agree. The 4680 news was what we've been waiting to hear. So they have the 4 lines for production in Austin. They talked about late 2024 having phase 2, another 4 lines built out. And then at Cato Road, they confirmed the rumor that they were shut down for retooling, and they have parallel development lines running. And this is actually, I don't know if it was known, but it's also how they developed the 4680 original version, the 4680s. They try a couple different processes like A/B testing and see which one's going first, and then they take the best and then they tweak it, and so it enables them to make incremental improvements far faster. It's almost more exponential improvements because they have multiple lines and they're testing multiple theories at once and comparing them against each other. So, and then they confirmed what we already suspected of quite a bit of the retooling related to the Model Y was to change the batteries that are being used. The Model Y for the near future, until that phase 2 comes online, is not getting 4680s. All 4680 production is going to be that new cyber cell. Remember, the 4680 chemistry can switch around. They don't have to retool the machines. They don't have to do anything like that. So the cyber cell is going to be a slightly different battery cell than they might use in a mega pack or than they might use in a Model 3. It's more energy dense. It's going to provide more power. How exactly they're doing that yet, we don't know. There hasn't been a teardown, but we'll find out. It's very bullish, and that they reiterated Cybertruck production of 250,000 vehicles, but in 2025 shows their confidence in the 4680 ramp. And then, it's largely missed, but Elon Musk again talked about the change of the entire economy that we're on the threshold of. Just like there was an industrial revolution, there will be an AI and an automation revolution, and it's going to completely change to an almost before and after, it would be my way of describing it, scenario. And he again mentioned on the earnings call that if your economy is a product of the number of people working times the number of work they produce, and you have AI and you have bots and you have full self-driving cars, then it almost becomes infinite how large your economy can grow. You enter into this age of abundance, and that is the next big thing that people are looking to invest into the companies that are going to create and participate in this transformation. And Tesla is in one of the best positions to do that. They already have monetized products. They can produce products profitably at scale. FSD might be a beta, but they're earning money off of it right now. And Elon Musk again said, despite all the warnings about the short-term stormy waters that Tesla's going to be navigating, that he still sees a path for Tesla to be the most valuable company in the world based on the products that they're investing in AI and the bot and FSD. And let's talk about that NVIDIA data center. So that is online. You know, he had mentioned that it was far more difficult to ramp than they thought. And now Tesla has confirmed that those 10,000 GPUs are online, and they think that they've done it faster than anyone else has been able to set up that data center. So that dramatically doubled their compute available to solve these AI issues.
Isn't it funny the things that we pick up on, but other people have missed? The other line that I really, really love was bots making bots. And I know we've heard this before, and there's going to be hundreds of bot companies out there. But when you think about it, right, it's who can scale the most and who can do it at the cheapest price and who has the brain. So they brought that all up, right? So if you create a manufacturing facility and you produce these bots and you scale it up, but then you have bots making the bots, it's almost like no one can catch up. You're going to just be the mass producer of this, and everyone else will have, hundreds of thousands. You're going to have millions. It's going to be hard to catch up at that point.
Well, I also like the fact that they are always innovating in and of themselves and willing to disrupt themselves, right? So they also mentioned how Cato is going to be working on the next 4680 cell. And that was like, holy cow, like they're not stopping. Like they have the cyber cell and it's doing all these great things, right? But then they're still thinking ahead and they're willing to disrupt their own situation, their own system and processes just to make sure that they're always innovating. So I thought that was pretty impressive.
Yeah, and I wanted to add something here because what ties into the whole argument again is it's so interesting to see that people say, oh, it was a miss, and this Tesla missed this, the timelines were missed here, and people focus on the timelines so much. But if you have a very innovative company that is on the forefront of innovation, you get chaos. That's what you get, because Tesla isn't anxious about just shifting their plans on the fly if it makes sense. A good example for that for me was, that's my theory here, that the Model Y 4680 version was out of the, they had to put those cells in some kind of vehicle to test it. And now they've tested it before the Cybertruck was released. And decisions like that are very important because now they have the data for the batteries. They know how they function. They improve them on the fly. But if customers had problems with the battery, they just swap out the vehicle, for example. They could do that. That's why it was such a good plan. And it's interesting that, Elon is so deep in the topics that he's willing to shift and tell the world as well that a shift will happen or a timeline will be pushed, compared with traditional companies that are not agile. That's the thing. You have everything's planned out, and sometimes they push something, but they just worry about the press release. That's why they, for example, produce low volume vehicles like 300 electric vehicles almost by hand, you could say, and not really totally efficient and in the manufacturing. And then, of course, you have a headline, GM released their EV, the Tesla killer and everything, but they're not mass producing. That's the difference. It's just like concepts that they sell to the customers almost. And it's interesting that this isn't picked up as much. And you get this mixed bag with Tesla because, of course, they are so innovative. That's why you get this kind of chaos in the timelines. But I think they are totally on track with like you've also mentioned here, all the points you touched on AI, you touched on the Tesla bot. And yeah, it will be a total game changer. And now with FSD 12 released, even if it's not as polished as the version before, in some cases, in some edge cases, now they have the compute and it's such a big number of or big teraflops that they now can process. It's crazy how our jaw will drop how fast they can improve FSD 12 now while it's already running. And this is actually pretty crazy. And it's crazy how the media doesn't pick up on FSD12, for example, just this small segment. And it's crazy how this is overlooked still. It's amazing because now it's just about compute and the data is there. Everything's lined up to improve FSD12, and we're going to have robotaxis sooner or later. It doesn't really matter. 3 years, 5 years. I think it's pretty close, I would say. Yeah.
Yeah, I think at least for me, I think Herbert, Jan, and Amy, like I think you summed it up right. I think it's I've been still slowly getting through. I think I have like 8 hours left of the biography, but I just got through the solar surge, through the Starship surge within the biography, and if you read it and remember it, you know, the amount that Elon would just go into these like, you know, times of innovation, and they're typically back to back, and then you know, that's Tesla for you. I'm not saying that they're doing that every single time, but when there's a focal point or a big issue, you know, and this could happen again at any point with the Cybertruck, maybe the next gen platform 3. But you know, they come in, you know, Elon will come in, or potentially even the leaders will come in. They'll bring everybody to a specific area and they will just work on everything, and you pretty much have to go 24/7 for that surge, and essentially no stone goes unturned, and you have to question everything and make sure, you know, do your best to get to certain targets, even if they're ridiculous. But that's the company that you're dealing with. That's the man that, you know, behind, you know, that has really allowed a lot of these companies to get where they are, is just that vision and that work ethic. Because otherwise you can get comfortable. And like I said, all of these other OEMs, I mean, Jen was just talking a lot about that, where they, you know, they're just putting out, you know, 300 or 400 cars. They don't care about how efficient it is. They're just doing it because they, you know, they want to be able to talk, oh, we're producing EVs. But it's just one of those things where, you know, Tesla, it's actually pretty scary what these OEMs are going to be up against in, you know, 2 to 3 years time, especially as we continue to go through these macro headwinds. Because if I'm them, why am I going to continue to make EVs if, you know, I can barely move my gas cars, that, you know, I'm dealing with inventory, and more importantly, it's more profitable. And you're dealing with all these strikes right now. So it's going to continue to delay their ramp of EVs or their investment in EVs. And yeah, so I think it'll be interesting. One thing, there was 2 things that I wanted to get into. I know we're kind of getting close to, so, and I don't know everyone's schedule completely right now. But Amy and Jeff, I think one thing you always say is, you know, pay attention to the capacity. And that was like what we wanted to talk about, or wanted to, you know, wanted to really look at going into this quarter. And I think, you know, actually, I think this might be the old one, but what I wanted to say was, I think that Tesla released the results for, or they showed actually how much capacity that they could have for next year, or even now, and it's close to I believe it was 2.4 million or something like that.
2.35.
2.35 to be exact. Thanks, Herbert.
Mm-hmm.
And, you know, for them to even hit a 50% growth, I mean, they only need to get to like 2.7. But again, even if they're at 40%, you can continue to take that down. Their capacity has significantly grown, you know, and I think that they're set up very well for next year. Again, you know, we don't know exactly all the macro stuff, but what were some of your thoughts potentially on, you know, the release of the 2.35? I mean, again, Cybertruck was 125,000, not necessarily that they're going to get there next year per se, but just the capacity is always something, you know, to consider, especially as you're looking for, you know, how do they get to 20 million?
I would just say that, go ahead, Joe, sorry.
Oh, yeah, just real quick. I've always said that, to me, I mean, capacity is great, but I look at it like, you can focus on one thing, but you know what I mean, the reality is still another. And people look at these numbers, and they look at like the fall of, you know what I mean, like market share or whatever. But like I always say, it doesn't matter if Tesla is selling 8 million units a year and they only have 5% of the market. You know what I mean? Like, they're still producing these vehicles. They're still doing it. And by them showing that guidance that they even have a cap set up for this at that rate, I mean, we can all look at Shanghai, and that place is producing way more than what they said it was going to. And that cap was initially, I think it was like 400,000 or something like that, or whatever it was, but it was nowhere near what they're producing now out of there. And so it's just really interesting.
John, can you show my screen? Gonna let me share a screen? Yeah. This, I wish I remembered who the X user was that put this together, which is fantastic. So it says 2.35. What I saw out of this was, this is the capacity for the existing factories. So people should not be terribly concerned about a gig of Mexico and his comment that we're not going to put full, metal to the pedal for that. This potential is right there. And then here you can see that next gen platform is various. So they do plan to have multiple areas where that can be developed.
Definitely. I mean, it's I could remove this, but yeah, I think that this is what I was trying to show. Not, well, it's nice that they have also to the bottom chart, but yeah, I think it's really exciting just that they're able to get to 2.35 with the current factories. And that's why if you look at if they can be coming out towards the end of next year, with Giga Mexico in ramping and potentially again continue to build out some of their current factories, they should be set up well for 2025. I mean, that's how this company's thinking. They're not thinking, just 1 to 2 quarters out. They're already thinking, how do we get to certain numbers in 2025, 2026? And that's great. Like, that's what Investor Day was all about. How do we get to a sustainable future? And the great thing is that they probably are one of the only companies who've ever done that calculation to say, how do we get the whole world to a sustainable future? And so I think that's the big thing here is that they're already set up potentially for a great year next year. Obviously, I know Cybertruck is going to be, it's kind of that 100,000 that maybe you could potentially even remove from that. But it's just one of those things where they'll be ramping that. But I think they're definitely in good shape for next year.
Yeah, I think that the analyst question about production is something we should keep in mind. So Tesla has always guided to 50% year over year CAGR for a multi-year horizon. And we did get, for the first time, Tesla said we won't be able to sustain that forever. We can't exceed the mass of the known universe. But analysts' question was, we have 28% growth next year in our models, like 30%. Is that what you're going to do? And the capacity that you show on that chart shows the capability to do that without any new factories, without anything else. So and this year, Tesla reaffirmed 1.8 million, which is over the 50% year over year CAGR, which Tesla has always said some years more, some years less. This year was a more, next year is going to be a little less. Over time, the growth rate is phenomenal, and you don't see companies consistently grow at this rate, especially when they've reached Tesla's current size. And I really like what Joe said. Tesla has said, let's stop looking at EV share and start looking at general market share. The global economy for cars is something 70 million cars per year. So Tesla doesn't need, there will be more EV companies. Hopefully there's more EV companies, because Tesla isn't going to be producing in 2030 70 million vehicles. But if you want a sustainable world, you're going to need that many EVs produced every year. And then it's 1.8 billion cars in the world. So you need to replace all of those out. This market is so enormous. The idea that Tesla actually has a demand problem when everyone admits that EVs is the future, it's a couple lumpy quarters is what it's going to be. And in the scope of the history of what Tesla has done and what Tesla will do, you will look back at these couple of lumpy quarters, and it will be so meaningless to you that it happened, as difficult as it is when we're navigating through them. And that doesn't mean don't prepare your personal finances for some lumpy quarters, because you need to do that.
Well, awesome. I do know we are coming to the top of the hour. And so
can I do a
yeah,
quick shout out to Tesla Con Singapore, November 11th? I'm going to be there as a speaker.
Yeah,
it's an amazing event.
Yeah, if you're able, if you're in the APAC region, you know, definitely make sure to check them out. I believe you can go to TeslaTakeoverAsia.com and buy tickets. It's November 11th. They have some amazing speakers, obviously Amy being one. And it's just going to be really, really cool to bring that community together, especially with everything that's happening in, especially that region, Malaysia, Indonesia. You know, Tesla even launching in some of those regions. So there's a lot of really cool things happening, and definitely make sure to check that out if you're around. But yeah, I think obviously we couldn't get to everything today. I know that there were some other really big things, like the cost of goods going down to $37,500 per vehicle. Despite these macro headwinds, they are still reducing costs, which is just insane. The Model X Plaid has increased by $5,000. BMW and Toyota are adopting the NACS standard now, so that's really cool. And several other things that are happening. I think even the DMV is now doing, what is it, or TSA or whatever it is now doing VIN numbers for the Cybertruck. So a Cybertruck event, November 30th. Hopefully you can get a ticket and go. But yeah, a lot of exciting stuff happening. Obviously there's been, you know, it's kind of a rough quarter as far as like the actual stock goes. But again, if you're thinking long term, there may not be a better company to invest in. So obviously do your own research, but please patronize all of our hosts and our special guests today. They are tagged on X, and obviously they're tagged in on the YouTube description as well. So please give them a follow, subscribe to their channels, and obviously, you know, make sure to give them a follow and get some of their commentary. So thank you all for joining us this week. And have a great weekend, everyone.
Thanks.
Thanks for having me. Bye.